Yo, yo, yo! Hope you all are having a fantastic week. I want to set off some time to make this video for all my beginners who wants to take their trading to the next level. And I think this is a crucial video you guys need to watch from the start to the end, where we will focus on what the financial market language is and try to learn some patterns to actually be more successful, so you don't sit there and wonder what the market will do, so you actually can predict something, you know, because the more you understand of the market, the more successful will you of course be. So how can we master financial language and of course the anatomy and psychology of each formation, right? The first thing we need to know is that how each candle work. All right, we know for sure, if you have been in TradingView, for example, which I mentioned in my last video, that each candle has a different time period of candle. We have everything from 1 minute to 5 minutes to 15 to 30 up to 1 day, even a 1 week. But each candle has 4 important factors from each candle, and that is where it opened, where it closed, the body, the upper shadow, lower shadow, the low, and the high. What does that mean? In this case, the white is bullish and the black is bearish. It can be different colors, it depends on your settings, but in this case, this is how it looks. All right, so when it opens and closes like a bullish, it means it's going to go up, right? And the low shows how low it has been. The shadow tells us, okay, it was there, but it has gone up. It went all the way up here, but it went back down. If it's a daily, you know, it's going to range from this bottom to this top, for example. And the bearish one is the opposite. It opens here and closes there. All right, easy as that. So what we're going to do now is that we're going to go through different type of candlesticks, patterns, to learn some more about the financial market language, right? So we have the doji. We can then start off with the doji. And this is the candlestick that tells us nobody's in control anymore. Anything can happen, you know? However, it tells us if it's, for example, an uptrend and a doji occurs, it tells us that the momentum is slowing down. It can continue, but it also can go down, if you know what I mean. So I have written here, it's a good opportunity to exit or enter if it meets your requirements. Let's say you have bought at this dragonfly doji, which means it's going to go up because it has hit the support, for example. If you see, it was a support here and the dragonfly came with a long tail of rejection. It's perfect entry, so you entered here and you saw this rickshaw man, long-legged. However, it's a doji, so you were like, okay, maybe I should close at this point. I have made some pips, I have made some money, I'm happy. You closed and you can maybe buy even, sell, I mean. So you sell, boom, then another doji and another doji. All right, so what it means is that it's the momentum is slowing down. That's the most important part. And then we have the inside bar pattern. The inside bar pattern can give us a sign about pause or consolidation phase, right? However, in a trending market, it's a continuation for a good entry. Let's say, for example, you didn't enter at this point, right? It was a strong resistance and it got rejected. You could enter, for example, here, and you could have your stop loss up here, but you didn't enter. However, at this point, it made an inside bar. It can be two candles, 3 or 4, so long it's inside the motherboard, right? Like, for example, like this one. It's 2 candles, so you could either enter here or there. However, both are inside the motherboard, mother bar, right? And then you could just sell. Boom. Nice entry. And in a range market, it can mean reversal. And the range markets like this, right? Up and down on support and resistance, right? So when that comes, it means just a reversal up and down. That's a perfect entry for range. And then we have the engulfing bar. The engulfing bar exists in both bullish and bearish, and it gives a signal of exhaustion in the market, right? And let's say you have sold at this point, so you understand the psychology behind it. It drops all the way down here, and you see that it forms a bullish engulfing. What will you do? Of course, you're thinking this is going to turn, this is going to go up, we have lost power, right? So you're going to sell, close your sell position, and the buyers find interest, and they see that the buyers is taking control, they have formed a bottom, and they're going to push the market even harder, right? So that being said, buyers can buy positions here, and the sellers will of course close. And the opposite, of course, if it's going to be bearish, right? And then we have the pin bar. The pin bar is also in a bullish and bearish. The longer the tail, the better, because it means the amount of rejection it actually got, right? And it mostly occurs near support or resistance and can indicate reversal, right? So let's say you have a strong resistance at this point, right? And then it got rejected and went down below the resistance again. That's a good sign that you should actually sell, because it didn't break the resistance, right? It also goes well with moving average and Fibo retracements. Let's say you draw a Fibo from here up to there, and then it got rejected at the point, you know? I'm gonna make another video based on moving average and Fibo retracement, but for now, just know that based on support and resistance with the long pin bar, it's a good entry because it's gonna reverse, right? Cool. And then we have the morning star and evening star. And the morning star, it's only gonna work in the end of a trend. It doesn't work in, for example, a range or a choppy market. It's gonna only be in the end of the trend because it's gonna reverse, right? So if it's a downtrend, the first candle is of course bearish, and this is strong. This is a strong bearish candle. However, it made a doji, and then it made, because at this point it has lost momentum, right? So we don't know where it's gonna go. It can continue down, it can go up, right? So the third candle, it's a sign that buyers are taking control of the market, right? So what you're gonna do at this point is that you're gonna close and you can actually buy, for example. And the evening star is of course the opposite. Cool. And then we have the piercing pattern and the dark cloud cover. All right. So in a downtrend, piercing pattern may occur, but require a candle to close below and close over 50% of the first candle to be valid. What that means is that, for example, here it got a pin bar, right? It got rejected, so it went down. And if you can see at this point, it made a new candle which opened from the bottom, right? So it can have, I want to imagine this, right? This point is not there yet. It's going down, strong bearish candle, and it goes down here. But from this point it starts to go back up, and so long it closes 50% over the first candle, then it's valid. And that's a sign that the buyers is taking control. They will shake off the sellers. The sellers were gonna be like, oh shit, this is gonna go up, I shall close this, I shall take my money. And that's what it does, right? And the dark cloud cover is the opposite. It's just the same thing over 50%, but it's gonna be the opposite way, right? And then we get the MARUBOZU. All right, this is the easiest candle to recognize in the market, and the most important, of course. And this is the opposite of the doji, because the doji is like, it indicates indecision. We don't know where the market's gonna go, blah 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 blah, right? However, if a MARUBOZU occurs, it can be a bullish and a bearish. If it occurs in a downtrend, it indicates a trend reversal, right? It tells us the bulls, the buyers, has taken control of the market, so this is gonna go up. You should close your trade, right? And the opposite in an uptrend. If it's an uptrend and a bearish MARUBOZU occurs, it's gonna go down. However, if a bullish MARUBOZU occurs in an uptrend, it's a sign of continuation. So it's a good entry point again. All right. So this is the last pattern. Thank you so much for watching. I will appreciate if you could like this video, share it so more people can actually see this video and take some learning from it. Also, if you could subscribe, I will appreciate that a lot. Thank you, and have a great weekend.